Hello, I'm Mijun from Big Jushinron University. July 18th, today's Big Jushinron speech begins. Welcome to Mijun, where we continue to uphold the fundamentals of investing in United States stocks as always. Today, I slept in for the first time in a long while. I'm usually a sensitive person, so I rarely ever sleep late. Something that happens maybe once or twice in 10 years happened this morning. I think I was just really tired yesterday. Like I briefly mentioned on the broadcast yesterday, there was an important event for my family. And in the United Kingdom, if you use an event company, the cost is no joke. It can be several million won. So yesterday, my wife and I had no choice but to manage the event ourselves. Because of that, the event ended late. We had to clean up and I guess I was a bit tired. Anyway, since I have a very short amount of time to get today's broadcast out on time, I think today's video might end up being one of the shortest in the history of the Mijun on YouTube channel. I'll try to summarize and deliver only the most important points. Alright, then let's get started with today's United States stock news prepared for July 18th. Today as well, I'll start by summarizing yesterday's United States stock market trends. Today again, we see a picture filled with green. Lately, investing in United States stocks has been really enjoyable. It's not a big surge every day, but the market keeps rising little by little, steadily. Personally, I'm both excited and a bit worried about how long this good Goldilocks period will last and how long this trend will continue. But for now, I just hope we can enjoy this pleasant upward momentum. If you look at the movements of the major indexes, you'll see the same pattern repeating. At the very top, microcaps, or the smallest stocks, performed the best with a 1.38% increase, and the second best index was also small caps, which went up by 1.17%. So, those of you who have watched my recent videos probably noticed that this repetitive pattern has been happening lately, with microcaps and small caps leading the market. Let me explain this part again. Usually, the United States stock market goes up and down in cycles of about 4 years or 5 years at most. But when small caps are running like this, it means the upward trend is getting very steep. Usually, after the United States stock market goes through a correction or enters a downward trend and then starts to rise again, people are too scared to invest in small caps. For example, in 2022, we went through a terrible bear market. After that, from the end of 2022, the stock market started to rally. Even so, in 2023 and even into 2024, megatech companies led the upward trend. That means investment funds were concentrated in the most outstanding and reliable companies. But what about the phenomenon that's been appearing recently in 2025? Now, instead of megatech companies, investment funds are moving towards stocks that may be a bit weaker but have dreams and hope. As a result, money is no longer concentrated in one place but is being spread out to various areas. On the other hand, with these microcap stocks, even a small increase in investment funds can create conditions where the stock price can soar rapidly. This is primarily due to their low market cap. So recently, even holding a few of these small stocks can really help improve investors' mood. That's what I can tell you. It's the same when we briefly look at the actual performance of the United States stock top picks. Here, let me list their performance over the past month. At the top, Coinbase increased by 61.8%, followed by B2. Advanced Micro Devices, Cred Technology, and Celestica went up by 23.2%, First Solar by 20.6%, Trade Desk by 20.4%, and Strategy by 20.3%. So the stocks that have given the best returns over the past month don't really seem like blue chip stocks. So rather than companies with huge market capitalizations, it's the smaller stocks with more of a growth stock feel that have been enjoying a nice upward trend over the past month. That's how we can sum it up. Now, if we look at the names of the stocks whose trends have slowed down a bit over the past month, we can observe this phenomenon. For instance, Talit Energy is a small cap stock. But if you look at companies like Meta, Tesla, and here, Amazon, Google, Uber, these larger companies, their stock prices haven't been interesting over the past month. Investment funds are flowing into potentially exciting stocks that could surge rather than safe stocks. Small cap and microcap stocks continue to surge for a reason. The current market is not being led by institutional investors but by individual investors. So, in a way, you can see this as a stage where a bubble is forming. However, if the bubble keeps growing like this, eventually there will be a moment when it bursts. We can't know exactly when that moment will come. It could happen a month from now, or even a week from now, or it might continue for another 6 months before eventually bursting. The important thing is, when you build your portfolio, rather than putting everything into just one or two stocks, I think it makes sense to have some blue chip stocks and also include some small cap stocks with growth potential. I want to suggest that joining this kind of market with a balanced approach would be more reasonable. Anyway, yesterday we saw both small cap and micro cap stocks perform well. There are two meanings to this. First, it confirms once again that this is a market led by individual investors. Second, it means that there was either some good news related to the economy or at least no bad news. Yesterday, one of the important economic indicators was released. So, the first article we'll look at today is about the United States Retail Sales Index that was announced yesterday. The Retail Sales Index report is very significant. Currently, many investors think that the United States economy might slow down due to the impact of tariffs. It would be good to check through the report whether the United States economy is actually slowing down. United States retail sales in June rebounded across a wide range of sectors and showed the possibility of easing some concerns about a slowdown in consumer spending. What about retail sales figures that are not adjusted for inflation? After 2 months of decline in April and May, retail sales actually decreased, but fortunately in June they surged by 0.6%. And this figure exceeded almost all the expectations of economists surveyed by Bloomberg. Sales excluding automobiles rose 0.5%. According to the retail sales report released yesterday, there is a control group or sales group that is reflected in the calculation of goods spending for the gross domestic product. This is very important because if these figures are good, there's a high chance that the gross domestic product numbers will also be good. Fortunately, the control group sales figures also increased by 0.5%, so you can see that the first half of the year ended on a solid note. These control group sales figures are recalculated, excluding food services, auto dealers, building material stores, and gas stations. Alright, let me wrap things up with a summary. The retail sales report went up by 0.6% compared to last month, but the market expectation was 0.1%. They thought there would be almost no change, but unexpectedly, the sales volume increased this much. Secondly, when they recalculated excluding automobiles, it came out to 0.5, but the market expectation was only 0.3. Now lastly, the control group, which shows various figures included in the gross domestic product, also had an expectation of 0.3, but it showed a very solid result at 0.5. So yesterday, with the release of a healthy sales report that gives the impression that the United States economy is strong, it was a day when small cap and micro cap stocks were running excitedly. This is how it can be summarized. Now I'll wrap up with a word from Mijun. With this, the Federal Reserve will hold the Federal Open Market Committee meetings on July 29 and July 30, but the possibility of a rate cut at these meetings has almost disappeared. It's nearly non-existent. That's how you should see it. But at the same time, it raises the question of whether a rate cut is really necessary. Because the base interest rate is very high right now, and when interest rates are high, it inevitably has a negative impact on the economy. Economic growth is challenging as it relies on people borrowing money for investment and development, which are likely to decelerate. But the problem is, even though the base interest rate has stayed high for a long time, the United States economy continues to show strong performance. So people start to wonder, do we really need to lower the base interest rate? The economy is doing well as it is. Now here's what's important. What's really important is whether inflation will accelerate again due to Trump's tariffs or if it will stay the same. So, as long as inflation doesn't rise again, the healthy state of the United States economy makes it much more likely that this rate cut cycle will be prolonged. When investing in United States stocks, the most important thing is whether the interest rate cycle is in a cutting phase or a hiking phase. That's really crucial. So, if interest rates are expected to rise in the coming months or quarters, there's a high chance that a bear market will begin at that time. What investors fear the most is a bear market, right? A bear market happens for two reasons. One is that the United States economy will fall into a recession in the near future, or that interest rates will finally enter an upward cycle soon. If these signs appear, there's a high possibility that the United States stock market will not perform well for a long period of time. But right now, the opposite is happening. The economy continues to show strong performance. The important thing is that we're currently in an interest rate cut cycle, but this cycle is progressing very slowly. So, if the rate cut cycle ends in just 1 or 2 years, then we can expect another increase afterward. But right now, the rate started to go down and then stopped, right? And there's still a high possibility they'll drop much further. It's still over 4%. Therefore, there's a high possibility that the rate cut cycle will be prolonged for more than a year going forward. That means there's no chance the United States stock market will fall into a bear market going forward. There's a high possibility that the market will maintain an upward trend for a long period of time. So, if the economy remains strong, despite high interest rates, it's likely that the Goldilocks market we like will continue for a long time. I think that's how we can sum it up. These days, I'm getting a lot of questions about securing cash. So today, I'd like to give my answers to the questions that many people commonly have. This is a post left a day ago by someone using the username Kochari. Hello. I'm disappointed that there's no way to communicate with Mijun after joining the membership. It's great that you're responding to comments like this. I really enjoy times like this. There's already so much information in the news, so I think these moments of communication are even more valuable. Let me briefly explain this part. Mijun membership isn't free, it's paid. With paid memberships like this, one-on-one communication isn't possible. If I answer you one-on-one like this without having an investment advisory service license, this would be against the law. Please keep this in mind. And I asked this once before in the comments, but how should I manage my cash? There's no dollar interest at all in domestic comprehensive accounts, so it's hard to keep a large portion in cash. Is there any way to manage this? A lot of people have asked similar questions. There are also a lot of questions about taxes related to this. But for these two things, I'd like to give the same answer. Let's read it together. Hello. To earn profits from holding cash, you can get annual interest of 4% to 5% on your cash through dollars, MMFs, short-term bonds, ETFs, or Interactive Brokers dollar deposits. And one more thing, I also have a stock investment account in the United Kingdom. I use Robinhood, and in the case of Robinhood, if I hold cash, they are currently giving more than 4% interest on it. That's because the base interest rate is high and bond yields are also high. But I think the situation is a bit different in Korea. But even so, I personally prefer to just hold on to dollars. Let me briefly explain why. Even just investing in United States stocks makes me worry a lot. It consumes a tremendous amount of my energy and time. When it comes to time, I spend more than 12 hours a day sitting in front of my computer, checking the news as it comes out, doing technical analysis, and paying attention to various things. It's not just one or two things. So to be honest, I don't have the capacity to manage cash right now. Time and energy to manage cash too. In my case, I think if I focus a bit more on stock investments, I could make much bigger profits than the interest I get from the small amount of cash I have. It's the same with taxes. So the time and energy spent on taxes and the time and energy to manage cash too. How can I find better stocks at better timing, even just a little bit? I'm all in on this. I want to explain this part to you all once again. Just earlier I mentioned that although I have cash on hand, I'm not particularly interested in generating profits with this cash. Actually, recently, as stock prices have risen so much, my cash ratio has dropped a lot. So yesterday, I sold a few stocks to slightly increase my cash ratio. But there's an interesting episode I'd like to share with you all. As you can see, most of the top picks by Mijun went up yesterday as well, but there were some stocks that fell. One of them was Talon Energy. Talon Energy's stock price hasn't been doing well lately. And as you can see, it dropped 1.35% over the past week and a whopping 7.65% over the past month. That's a pretty poor performance compared to other stocks. But if you look here in the pre-market, if you check the futures index, it's showing a sharp upward trend of 14.4%. But to be honest, one of the stocks I sold a bit of yesterday was Talon Energy. I didn't sell a huge amount though. I think I reduced about 20% to 25% of my holdings, but as soon as I lowered my position like that, the stock suddenly skyrocketed. Personally, I feel a lot of regret about it. So today, I want to explain to you the reason why Talon Energy's stock price is soaring like this. The answer is actually in the title of the article. There's some really great news that they've acquired 2 gas power plants to meet the electricity demand for artificial intelligence. What about Talon Energy? To meet the rapidly increasing electricity demand at artificial intelligence data centers, they acquired 2 gas power plants in Pennsylvania and Ohio for about $3.8 billion. The power plants they acquired this time are state-of-the-art, high-efficiency combined cycle facilities with a total capacity of 3 gigawatts. Instead of being outdated, they acquired modern, highly efficient power plants at a low price. That's how you should view it. As a result, they have secured additional capacity to supply electricity to around 2.4 million households. That's how it should be viewed. Now, what about these kinds of deals? By securing gas power plants that can provide a stable 24-hour electricity supply, this reflects the trend of large-scale acquisitions in the energy industry aimed at supporting the growth of the artificial intelligence industry. According to the Chief Executive Officer of Talon Energy, acquiring existing power plants is a much faster and more cost-effective way to immediately meet artificial intelligence power demand than building new ones. So, how much cost can actually be saved? They proudly say that they acquired 2 power plants at a price that is 50% to 65% cheaper than building new ones. Now, let's listen to a bit more from the Chief Executive Officer. His name is McFarland. According to McFarland, Talon Energy's strategy is compared to a flywheel. The example is that they sign long-term supply contracts with customers like major tech companies from their existing power plants. When that happens, the cash flow improves significantly. They use this cash to acquire new power plants, and after acquiring new facilities, they can sign more large-scale contracts. Then, more cash comes in. Then, they repeat the process. They claim to be leveraging the flywheel effect, enabling them to continuously expand their power plant capacity, and they proudly promote this achievement. According to him, the artificial intelligence boom will support the high value of existing power plants for at least the rest of the 2020s, so for at least the next 5 years, and it can be used to meet the initial surge in artificial intelligence demand. He presents this optimistic outlook. As always, I'll wrap up with a word from Mijun. This time, we acquired 2 gas power plants, and I'd like to talk a bit about how much impact this will have on our performance. Before acquiring the 2 gas power plants this time, Talon Energy's total generation capacity was 12.4 gigawatts. However, the total capacity of the energy center in Moxie Freedom and the Guernsey power station, which we acquired this time, is about 3 gigawatts. The generation capacity increases from 12.4 gigawatts to 15.4 gigawatts, a 24.2% increase. The total power generation capacity increases by a substantial 24.2%, which is a very high figure. Therefore, the total capacity of the power plant has also increased significantly. We can understand this as good news. Now, another incredible figure comes up. In fact, due to this acquisition, it's predicted that Talon Energy's annual power generation will increase by as much as 50% from 40 terawatt hours to 60 terawatt hours. Now, you're probably wondering why. Why did the power generation capacity only increase by 24%, but the actual amount of power generated can go up by 50%? Well, that's because the 2 power plants being acquired this time are the latest high-efficiency, large-scale gas power plants. What that means is, it implies that these power plants can operate at a higher rate compared to existing facilities. They are more efficient, stable, and can be run more frequently than other current power plants. While Talon Energy's annual power generation rose by 50%, revenue won't necessarily increase proportionally. Revenue is calculated by multiplying the total power generated by the average unit price. And Talon Energy sells electricity in the wholesale market. You can think of it as supplying power to a single grid called Pennsylvania, New Jersey, Maryland Interconnection. The electricity price in this market changes constantly due to supply and demand, fuel prices, which are usually natural gas prices, and the weather, so you can understand that the selling price is quite volatile. However, despite that, due to the confirmed construction of artificial intelligence data centers, we've recently seen the largest increase in electricity demand ever. So, considering this situation, it's very unlikely that electricity prices will drop sharply anytime soon. So, what about the acquisition of these 2 gas power plants this time? It can be considered a major positive factor that could rapidly improve Talat Energy's performance. Now, as you can see here, Talat Energy's momentum hasn't been very good, and currently the relative strength index has also dropped to 44. Because of this, I sold some of my shares, but it turned out to be a mistake. Now, if you look at the stock price chart, you can see that some good news came out at a very appropriate time. The stock price had been falling for a while. This orange line here is the 20-day moving average. The price broke below the 20-day moving average, and here is the previous high at $255. There is a very strong support line here, and it was just about to be broken. And since there's also the 60-day moving average here, if the $254 or $255 level was broken, there was a high possibility of a sharp and significant drop. But at this critical moment, major news broke out. As this huge positive news emerged, the 60-day moving average served as a support line. From now on, the chances of it taking off have become even higher. I'll wrap it up here. And the last content prepared for today, it's the Mijun podcast. I think a lot of people will be interested in today's podcast. It's about finding the next NVIDIA. There are actually a lot of good stocks besides NVIDIA. This time, we'll be looking at Seeking Alpha's Proud Quant Screen, which means we'll study the top 3 semiconductor stocks selected by their quant system through this podcast. Let's take a closer look at which stocks the quant system selected as the top 3 and why these 3 stocks were chosen, together with the details in this podcast. Today's broadcast was very short, and I think we'll have to wrap it up here. Once again, I want to thank everyone who joined us over the past week. Next week, since I'll be busy preparing for the move, I'll continue to greet you with shorter broadcasts. Still, I'll do my best to meet you every day without taking a break from the broadcasts. Until the day we all retire through investing in United States stocks, let's all be white together. Have a happy day, thank you. Hello, Mijun family. This time I'm back with another analysis article. It's about NVIDIA. Hello?
Oh, Mijun here. It's incredible that the market capitalization surpassed $4 trillion.
That's right. And with that, the entire semiconductor sector was shaken up.
But with all this happening, didn't you wonder if the NVIDIA party is over now, or if there might be other opportunities?
You're correct. I anticipated you might think that. We discovered an intriguing analysis article today.
What is it about? Well,
it's an analysis using Seeking Alpha's quant system. They ran the data and picked out 3 notable semiconductor stocks besides NVIDIA.
Oh, open data analysis? That's nice.
Today, let's explore the specific stocks they favored and the reasons behind their positive outlook.
Yes, I'm looking forward to it. Besides NVIDIA, what else is there?
All right, first we should take a look at NVIDIA's situation. You mentioned that the market is excited, but Seeking Alpha and the quant system have a different perspective. They issued a hold recommendation.
Really? Aren't almost all Wall Street analysts calling for a strong buy? Why is it so different?
That's the key point. It's all about valuation. In other words, the stock price is just too high compared to the company's value.
Oh, the price burden.
Yes, the quant system gave NVIDIA's valuation an F grade. For example, indicators like the price-to-sales ratio are much higher compared to others in the same industry. And another thing, if you look at the analyst earnings per share forecast revisions over the past 90 days, there was only 1 positive revision, but there were 2 negative revisions. In short, they see the growth potential, but find the current price a bit high. That's their analysis.
With the price increase, it's less appealing now. That's what people are saying, correct?
This only applies to NVIDIA and doesn't indicate the entire semiconductor sector has cooled down.
The sector is fine, yes.
For example, if you look at a representative semiconductor exchange-traded fund like SMH, its performance over the past month has exceeded 11%. The quant momentum rating is also A+, which is very good. Other semiconductor exchange traded fund S like SOSQ and iShares, Semiconductor Exchange Traded Fund also perform much better than the S&P 500 or Nasdaq 100.
Ah, so the sector itself is still really hot.
Yes, the sector is booming.
Then it must be important to distinguish the good from the bad within that sector, right? What criteria did Seeking Alpha Quant use to choose?
Yes, the criteria this system used were, first of all, among the companies in the semiconductor industry within the tech sector. They filtered for companies with their own quant rating of buy or strong buy and a market capitalization of at least $600 million.
So those are the 3 stocks you found? Yes, I'm really curious. Yes?
The first one, I'm sure everyone knows well. It's Taiwan Semiconductor Manufacturing Company, the world's largest foundry, which means a semiconductor contract manufacturing company. Recently, news emerged about their Arizona plant expansion. Due to the artificial intelligence boom, their June quarterly sales rose 39% year over year. Wow.
39%. That's incredible. But since it's such a famous company, is the valuation reasonable? It's not as costly as NVIDIA or similar brands.
TSM's valuation rating came out as C+. You can just think of it as about the industry average. What's especially noteworthy is the forward price on earnings to growth ratio. This shows the stock price level considering future growth potential, and at 1.16 times it's almost 38% lower than the sector average.
Yes, it is 38%.
So compared to its growth potential, the stock price is reasonable. That's how you can see it. The growth potential itself is rated A, and the momentum is consistently rated B as well.
Ah, TSM feels like a stable blue chip stock. So what's the next company?
The second one is Makeron Technology, MU.
Mijun is in the memory sector, correct?
Yes, they're a company that specializes in dynamic random access memory and NAND flash memory storage solutions. They make key data center components. Their recent Q3 performance broke records, with data center sales doubling. Yes, and there's also huge anticipation for that high-performance memory technology called HBBA.
High bandwidth memory is really popular these days. But I heard that Micron's stock price has gone up quite a bit recently. How are the prices?
The valuation rating is B, which is good. Notably, the forward PE comparing the stock price to next year's expected net profit is 16.77 times. This is a staggering 45% lower than the industry average.
Percent? This is really attractive.
That's right, but the A+ growth rating is truly outstanding. Next year's projected sales growth rate is 45%, which is more than 5 times higher than the sector average.
5 times, yes.
The stock price has surged 67% in the last 3 months, earning a strong B+ momentum rating. And what's really amazing is that over the past 90 days, analysts have raised their earnings per share forecasts 28 times, and not even once have they lowered them.
This seems like a really strong signal.
Yes, that's right. Now here's the last company.
Yes, where is the last one?
The last one is Astrolab's ALAB. This company specializes in infrastructure solutions for connection technology that help data move extremely fast within artificial intelligence data centers or cloud servers.
Oh, so it's about connection technology? Yes.
They're also collaborating with NVIDIA and are part of the NVLink Fusion ecosystem. They finally turned a profit in the first quarter of this year.
Oh, turning a profit. That's good news.
Recently, NVIDIA's stock price dropped slightly, but on the day it hit $4 trillion, the price surged.
Ah, I see. Compared to the previous 2 stocks, this one seems less familiar and its price movement appears more volatile. What are your thoughts?
That's right, it might look a bit volatile. In this analysis, ALABB's recent stock price drop might actually mean it's undervalued compared to its fundamentals. In other words, the company's own strength. It could be a buying opportunity at a low point. That's my perspective. The valuation grade is C. The forward price Dutch earnings to growth is 1.18x, similar to TSM and slightly below the sector average. The growth potential outlook rated AE is very positive. The long-term earnings per share growth rate is expected to be about 57% per year on average, which is almost 4 times higher than the sector average.
Wow, 57%, that's amazing.
The 3-month stock performance is at 52%, earning it a momentum B+ rating once more. Analysts are also positive, with 12 upward earnings per share revisions and only 1 downward revision.
Well, if the fundamentals are solid, a stock price correction could really be a buying opportunity.
Yes, that's right. Now, let me sum things up. Of course, NVIDIA is amazing, but quantitative analysis shows that its current price is a bit burdensome. As alternatives, companies like TSM, MU, and ALAC have strong growth and momentum, while offering relatively more reasonable prices. That's what we've confirmed. It seems that diversification is important when it comes to investing.
That was a really insightful analysis. I didn't know there were such attractive options besides NVIDIA. Then lastly, I'll ask a question that our Mijun family members should consider at least once, just like we looked at today. Despite the dominance of established firms, opportunities still exist in the semiconductor industry. Then, in your opinion, which company do you think will be the next big thing in this field, the one that will lead innovation like a second NVIDIA? Will it come from the existing giants we've looked at today, like TSMC or ALAB, or will a completely unexpected dark horse suddenly emerge? I think it would be great if you could think about it at least once, according to your own investment principles or style. Wow!
That's a really interesting question. Yes, I hope today's content will be a good reference for your investment journey.
We'll return with more valuable info next time. Thank you.
The beginning of a small dream is important. Let's plant a hopeful future together. Growing little by little every day. Is there excitement blooming in your heart? Release your greed, nothing will change. The result is just a continuation of the process. I'm not afraid even if dark adjustments come. I'll hold Miju's hand and move forward, becoming the light of an unseen tomorrow. A happy investment, supporting each other's dreams. Let's walk together down this beautiful downhill path. A happy investment, together with Miju, all of us, boldly and noisily, until the day we all retire together.
Thank you.